Hello and welcome to Crypto Weeklies. Today we are going to talk about Injective, conduct machine learning based price forecast and regression based analysis and accumulation strategies. None of the content is financial advice. The reason that we are talking about Injective today, over the last 24 hours, this token has pumped by about 6%. Or the wider pullback, this gain has been significant. In terms of the tokenomics for Injective, about 100 million injective tokens in circulation of token supply, out of which 97% is already in circulation, both by market cap and by volume. The token is under top 50 cryptos by market cap. So again, in terms of price versus market cap analysis, on a logarithmic scale over the year, you can see that the price has grown by about from $7 to $17, again 2.5x. In terms of market cap, the growth has been between 570 million and about 1.66 billion, again slightly over 3x. That means there has been more growth in market cap, which has not been reflected in price, about 0.5x worth of growth of market cap not reflected in price. That means there has been some impact of token dilution, again not too high, but again worth considering if there are any staking opportunities. In terms of analyzing the machine learning based price forecast, right now the key level of Injective is to look for is if Injective manages to hold the August 11 lows at around $17. If that's the case, the three scenarios forecasted by our machine learning model trained on ARIMA, LSTM, and XGBoost, the base case is in pink. The price action forecasted is between $15 and $17 at a base case level. That is, if there aren't any bias to the bullish or bearish side, that's the likely scenario forecasted by our model. Again, this is the reason for this could be the structure of lower highs and lower lows starting March of 2024. At one point, Injective was trading at around $45 in March. Now it's about 1/3 of that price. If on the other hand there were any potential bearish scenarios towards the end of the year, the price could dip till at around $6.70, and between that range and about $14 range. If you are interested in week by week forecast for each of the scenarios, the base case, the 3 standard deviation bear cases and bull cases, all of the content is available on cryptoweeklies.com. You don't have to pay or sign up for anything. The week by week scenario, you can see the base case is in middle. To its right are the three bullish scenarios at 68%, 95%, and 99.7% confidence. We were in the graph, we were focusing on the 68 percentile confidence level, the 2 standard deviation at 95 percentile. At a bullish scenario, the price action could see between $20 and $86 towards the end of year 2024. That's the bull case at 95% confidence. Equal and opposite is the bear case at 95% confidence. You can see the price could dip as low as $2. For the purpose of this forecast is not to say what will happen tomorrow, but again provide an update on what could be a theoretical ceiling and theoretical floor in each of the cases. In terms of regression based, polynomial regression based analysis for the crypto, again this particular analysis helps us determine the phase of the market cycle, again based on if the regression bands are trending up and if they are trending down. The relationship with price and time is non-linear for most of the cryptos. They tend to go up during the bear market and go down go up during the bull market and go down during the bear market. Again, the fair value color coded in pink is the regression based fair value to its up and to its down are the 3 standard deviation scenarios. Today we'll be focusing on only the 1 standard deviation. Right now the 1 standard deviation ceiling for the regression based model is coming in at around $16.4. That means price is slightly above the 1 standard deviation level. If that price action were to hold as support, the secondary level to watch for any potential rally is the $23.42 level, which would correspond to a 2 standard deviation peak. Injective has not made a 2 standard deviation peak since about 2023 April, so again about 1.5 years ago. Since then, the price action, although has witnessed significant uptrend, but the 2 standard deviations ceiling remains to be breached. The secondary level or support to look for is the $11.59, which corresponds to the fair value at this point in time. The structure of this regression based models can change based on the recent price data. So if you are interested in following at a daily level, you can utilize the link on the bottom of your screen, or check out the videos on the channel. The last but not the least are the three accumulation based model for injective. The first is the simple moving average based accumulation model, which deals with 20-week simple moving average and the proportional difference between the price and the 20-week simple moving average, and it's normalized and color coded between the risk of 0 and 1. The key idea is the purple patch or the plum risk level is where the risks are sufficiently low. Again, this is a shorter term model, does not deal with longer term accumulation. Again, deals with more towards what's the most likelihood mean reversion related trade. Per this model, the current risk level today at September 5 is at around 0.17. Again, second best time to accumulate injective per this shorter term model. The second model that we will be discussing today is the dollar cost average, or a regression based analytical model. Like the regression bands that we saw, we also have a regression based risk based model. Depending on the proportional difference between the price and the fair value regression line, again normalized between 0 and 1, the risk levels are color coded. Right now, per this model, the risk level at around 0.55, again moderate risk. The one standard deviation or the peak regression valuation at around $20, and the current price at around $17. Again, little room between the current price and the one standard deviation peak per this model. Again, this is a medium term model. In terms of the longest or the model with the longest time horizon is the time weighted average price model, which deals with the blue line, which is the time weighted average price currently at around $11, and identifies the zones where the price action is trading below this price. That's usually when the risks are sufficiently low. You can see the risks can be overlaid over here, and also identification of tops becomes easy based on the proportional difference between the price and the time weighted average price at any point. At one point in March of 2024, this model would have been, again, this is not retroactively fitted model. This model would have helped identify the tops, as well as, again, now that the risk per this model are at around 0.43. This model also helps understand where the current valuation for injective is in terms of its historical price data. So to summarize everything, the time weighted average price based risk level at around 0.4, that's the longest time horizon based model. The DCA model coming in at around 0.55 risk, the shorter term SMA model coming at around 0.17 risk. The regression based valuations to look for is the one standard deviation ceiling at around $16. If there are any rallies, the $23.42 level becomes more key in terms of analyzing if the forecast scenarios between now and December. The key valuation right now has become the bull case or the one standard deviation bull case at this point, pointing to a valuation between $17 and about $41 between now and end of year. So hope you like this content. If you did, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.